Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Falling into the second consecutive session, the Australian dollar weakens after the March inflation came in slightly below expectations, easing immediate pressure, but still showing elevated price pressures linked to high fuel costs. Markets continue to price the chance of further RBA tightening, though the softer CPI read tempers new term enthusiasm for aggressive moves. The Australian CPI moved to 4.6% in March, while trimmed mean inflation hit 3.3, keeping underlying price pressures above the RBA's 2 to 3% target band. The RBA meeting is next week. Let's see if we do get a 25 base point rate hike or they keep rates on hold at 3.85%. Elsewhere, the US dollar steadies ahead of the US Federal Reserve rate decision, while ongoing tension in Iran and disruptions elsewhere in the Middle East keep broader risk sentiment cautious. Turning to the technicals, we can see that the RSI has buckled and therefore looking for a further down test as the market looks towards the region of 71.45. A break there should give us room for a move to 70.70 and reassess with resistance capped at 72 cents. The Eurodollar trades weaker as markets await back-to-back policy decisions from the US Federal Reserve and the European Central Bank. Both central banks are widely expected to keep rates unchanged, with the focus shifting to inflation risks tied to elevated energy prices and the prolonged disruption in the Middle East. Market participants will also watch remarks from Jerome Powell and Christine Lagarde for tightening signals, while the German inflation data may provide an early steer. Keep an eye on that as well as the technicals because they have buckled and the RSI and the MACD are negative and therefore could weigh on the support down towards 116.65 and reassess from there in case we get a move down to 115.80.85 and with the resistance capped around 117.65 to 75. A very whipsaw price action when it comes to dollar yen, but I still feel the market is in favor of a down test. But we do need to see a close under 158.65 to support this head and shoulders, which is prolonged to a sideways pattern at present. Keeping an eye on the technicals though, there is a slight favoritism for this bounce up to 159.80, but let's see if the market takes a rejection from there, as there is still much uncertainty when it comes to the Bank of Japan and talk of intervention fears. Sterling, well, as we can see, the market is still a little bit weaker as all eyes look to the Bank of England on Thursday rate decision, where rates are expected to remain unchanged with Governor Bailey's guidance key, that is, to sterling direction. Let's see if sterling does get a direction to the downside because the technicals have broken down in terms of the RSI and weighing on the MACD, so we could get a move down towards 134.80 to 134.30 and a cap around 135.45 to 85. Now, I haven't had much of a view on gold, but I have over the last couple of days indicated that we could see some bearishness, and I even indicated to a target of around 4,500. Well, the market is moving lower and still weighing on the support, and you can see by the technicals they are in favor for a downward move. We've got the ADX trending, the RSI and the MACD negative. So let's see if we get moves towards 4,550 to 4,500. Now, I am neutral. It's just a little bit of a spec view given how the technicals are holding. And oil still holding to its gains and still trying to push higher, but I still feel there's a bit of a cap there, close to around $99 to $100 a barrel. But I'm neutral here as well. And I would rather keep out at the moment because I feel oil is just too volatile for any views at the moment. Well, that's a wrap. Thank you for joining me. And as always, look at the interest report. I hope you enjoy the great start to the day.